What's up, boys? Look at you guys on Thanksgiving vacation here in Florida and you're doing your work. I'm proud of you, boys. What's up, guys? Todd here. Welcome to the free video update. Coming at you from Pompano Beach, Florida, poolside. I'm working. And just want to update you guys after the Nvidia earnings. Crazy report, stock selling off, show you where we are from a technical and fundamental point of view. I'm going to sort of make this a vlog style video, splice in some real-time reaction to Nvidia yesterday in the hot tub. I'll give you the morning after, show you where we are technically, fundamentally, and also I want to take a minute to explain our process that we use at Trade Analysis and as well as the wealth management business, how we structure our week, how we filter through, use a top-down process, and give you some insight there. So hopefully that's helpful. And at the end, I'll take a look at the technical position of key technology stocks that are driving the market here. So hope it helps. Happy Thanksgiving. We all have a lot to be thankful for, right, boys?
Yeah. Yes.
I asked your sister yesterday what she was thankful for, and she said a hermit crab.
I know.
What are you guys thankful for?
Family.
Good answer, boys.
And food and water.
There you go.
Everything.
And how about a beautiful capitalistic economy?
Exactly.
Yep. All right, love you guys. Good job. Cheers. Say hi to everybody.
Hi, everybody.
Happy Thanksgiving.
Happy Thanksgiving.
Just sent you guys the video earlier about the Nvidia and XLK trades, and we're going to follow it up. Our earnings are going to come here in just a little bit in Nvidia. Can you believe it?
Mm-hmm.
This is Eden Rose, and she's learning to swim. So yeah, I just want to talk a little bit about the process that we use to go and select stocks. Maybe it'll help you guys. So the way we kind of break up the week is at Trading Analysis, and this is the same thing I do for the money management business inside Edge Capital. So the process I use, I apply both to run the research business and then run the portfolios at the wealth management business. So first thing we do is we start with Mondays, which is Macro Monday. And I always like to look at the big picture, what's going on with interest rates, which over the last 2 years has been huge with the inflation spike and rates going up. And interest rates are very much obviously impacted by what the Fed's doing in the short term, and then long-term rates have a big impact on the second big asset class, which is FX. And the higher the U.S. interest rates, the more foreign flows will come to the U.S. So they'll sell their international currencies to buy dollar, to buy our higher yielding assets, and that's kind of what's known as the carry trade. So selling or borrowing currencies in low yielding economies like Japan and borrowing in the US, or borrowing in Japan, investing in the US, and making that interest rate differential. But stronger dollars get impact earnings of our large multinationals, right? And then the inflation outlook is going to have a big impact on commodities as well, right? And then any kind of geopolitical scares like the Middle East and Ukrainian horrible situations going on there is going to impact commodities. And then, equities are the other asset class. So the four major asset classes are all, very much interrelated and to varying degrees. Sometimes it's not very much, and sometimes it's very, very related. So the last 2 years, huge intermarket macro relationship. So hopefully my goal, my wish over the next couple of years is for things to slow down the FX and interest rate and commodity market and just go back to good old earnings. So that's the first step of the week is Macro Monday. And then what we do is Tuesdays and Wednesdays we'll spend looking at, based on the macro flow and the interest rates impact that having on the stock market, we'll figure out, is the market preferring growth or value stocks, right? And then the lower the interest rates, generally the outlook, if interest rates are topped out and going to move lower, investors are more willing to pay for higher valuation growth stocks. And then conversely, what happened in 21 and 22 is if rates are spiking, it makes the argument hard that people want to pay for higher valuation stocks where, the cost of capital is up, and leverage companies with unsure balance sheets, maybe it's not such a good investment, and they would opt for value stocks, more dividend paying, stable balance sheet companies that don't need access to maybe variable rate funding. So the idea that the Fed is perhaps done raising rates is going to impact the shorter end of the yield curve, so 2-year treasuries and less. And then, 3, 4, 5s longer is more up to the market, and that's more based on inflation expectations as well as the credit quality of the U.S. government, which has also come into question lately, right? So on the Tuesday, Wednesday process, we want to look at, does the market look at value stocks, growth stocks? And number two, do they want to look at large cap, which is like 100 billion or more, medium cap, which we consider, is 90, 80, 70 billion down to about 10 billion, maybe 5 billion. And then anything 10 to 5 billion and below is small cap. So is the market preferring, small cap growth, mid cap growth, large cap growth? And so we want to figure out what's going on there. And then we start looking at the relative rotation graphs, RRGs, to figure out, to some benchmark, again, which group of stocks, small, mid, or large cap, value, growth, are rotating in or out. From there, we then go in and look at sectors. Okay, so the 11 sectors that make up the American economy, S&P, let me see if we can do it. Tech, consumer discretionary, communications, healthcare, industrials, materials, utilities, staples, financials, real estate. Did I say utilities? So 11 that make up, so we figure out, again, the market cap that the market is preferring. If it's growth, it's going to be focused in consumer discretionary, communications, and technology. Or if it's value, it's going to be in the other 8 sectors. And then we find the best stocks to trade within those sectors, value, growth, or then market capitalization, that we figure out. So that's the Tuesday, Wednesday report. Thursday is what we call Tactical Thursday, which is we take the group of stocks that are spit out based on our scans within RRG, and then we'll do Elliott Wave and technical analysis, fundamental analysis, to find the best group of stocks to make our watch list. Then that's Tactical Thursday, and then we'll decide, do we want to make any subtractions or additions to our portfolios that we hold for trading analysis. And then I also do the consideration, do I want to make any moves on the wealth management side? And then Friday, we finish it up with Chart Request Live. Members, if they have any stocks they want us to look at, we'll look at that. So that's our process. So hopefully that helps. I'm going to go check out what's going on with earnings and with Nvidia, and hopefully that helps, gives you a little insight into what we do. Obviously, we're in Florida for Thanksgiving right now. Usually we should be at home upstate New York, where it's probably snowing, and we'll get ready for ski season. But right now we're kind of chilling right now. So, all right, guys, we'll leave it there. Hope that helps, and let's go see how Nvidia earnings go. All right, let's see what's going on with earnings. What do you think, Each? How's Nvidia gonna do?
Good.
You think they're gonna do good?
Mm-hmm.
All right, let's see.
That's what they do. They splash.
Mermaid Splash. Okay, we need, so the earnings whisper number, EG, is $3.47, and the street is at $3.18 on revenues of $16.12 billion, okay? All right, what do you think? What do you think?
Yeah,
Do you think we're gonna beat it?
yeah.
Okay, good. 18.12 billion, up 34% from Q2. Data center, 14.5 billion. Oh, they're selling off. Oh shoot. 490, that's not good. Oh. All right, what's going on? Guides. Okay. The guides for Q4 revenue at 20 billion, plus or minus 2% versus CIQ analyst consensus 17.8. So the guide for 20 billion sees Q4 of 20 billion. Revenue expected to be 20 bill, GAAP, non-GAAP gross margins. Margins be 74 to 75%. Wait, what? Margins are supposed to be 74%? I think they're at 50% now. What? And the stock's ripping back. It's at $4.99 now. Okay, now down to $4.89. This is bonkers. Jensen Wang says Nvidia, GPU, CPUs, networking, foundry servers, Nvidia are all growth engines in full throttle. The era of generative AI is taking off. I don't see how this is a bad report. Come here, EG. Can you come explain this to me? Come here, yo. Come here. What's going on?
I'm doing right.
Breezes past estimates, but the stock dips. Why is that?
I forget it.
You forget me too. All right. Setting a new revenue record of $18.1 billion that came in above the $16.2 billion analysts for modeling. All right. Data center, 41% quarter over quarter, and up 279% year over year. Data center. EG, this looks like a pretty good report to me. I'm not too concerned, actually, at all. I should buy more. What do you think? All right. Well, interesting. We're going to have to go through this report a little bit, but data center is up. Guidance looks solid. Beat revs, beat EPS. Everything looks good. I think the market's just a little grumpy. Do you know anybody else who was grumpy today?
Who?
Nobody? Was anybody grumpy today?
No.
No? Okay. Okay. And 495 bid. 497 bid. I told you I should have bought more EG.
Yeah.
If you hesitate, you're a wimp. Am I a wimpy?
Yeah.
Yeah. All right. Well, we're going to leave it there. We're going to see how this shakes out. I got to look, see what the street doesn't exactly like about this report. It could be, just as I said in that video, that the market is generally overbought here as we have clarity on rates. So it's just, there's not a lot of buying gas left in the tank, but it's 498. This thing's going to go big. So happy Thanksgiving. Lots to be thankful for, right? What are you thankful for?
My hermit crab.
Your hermit crab at home? Oh my gosh. All right, so let's take a look at the process a little bit more. I'll show you the way we look at the sectors and then break down the strongest industry and sub-industry groups within the sectors, and then find the best stocks that are leading their respective industries and sectors. So we're looking at the RRG, relative rotation. Left is the monthly, right is the weekly, and I'll blow this out. And what we're doing is looking at it again. Each month is one dot, on each of these tails, as they call it. And we're looking at the strongest sub-industry groups within technology. Technology is XLK here in green. And we're benchmarked against the S&P 500 cap-weighted S&P. And as the market's moving up and to the right, you're picking up relative strength, which is along the horizontal axis, and relative momentum to the benchmark, which is on the vertical. So over the last, let's say from here, which is going to be August, back here in July, the semis were showing the most strength. And the fact that the semis are furthest out to the right in the monthly means they continue to be the strongest. But you're starting to see some other sub-industry groups move into favor, and those are application software, system software, and technology hardware. All right, so off of the monthly, get down into a little bit more actionable time frame is the weekly. Each one of these dots is 1 week. So now we're going back to pretty much the beginning of November. And there's been a few that have really hung in very well. So here's XLK. And then the one that's made the biggest move is system software. Application software is not making a big move up and to the right. It's just hanging and residing in a strong relative strength position to the right, not really picking up any vertical distance, which is going to be momentum. And then the other one that is kind of fallen out of favor just on the weekly is the semis. Now, there's obviously some big news out of Nvidia, which I think is a big part of the reluctance for Nvidia to go up because of its ban on its high-powered chips to China. But the semis even then have begun to make a very strong move up. So your strongest sub-industry groups within tech right now in the weekly are system software, application software, semiconductors, then down into tech hardware, storage, and peripherals. And of course, you got to keep in mind the monthly is more important than the weekly, and the weekly is more important than the daily, right? So you just got to keep in mind, if application software to make a big hook, that would help push the monthly track further to the right and up, catching up to where system software and semiconductors are. Semiconductors have made a very nice move since November 10th. And of course, if we can get Nvidia through 500, that'd be a big help. And then system software continue to do great. Application software we talked about in tech and hardware starting to come on, and there's two big stocks in there. Apple's one of them, and then Supermicro Computer, SMCI is another one. All right, so let's take a look at each of these groups. So let's start with, let's see what we have up here. So let's look at system software to start. All right, now what we do is we'll benchmark, or we'll look at and group each one in the monthly quadrant that it's located. And of course, you got to keep in mind, all right, where's system software in the monthly? It's in the leading quadrant. Where is it on the weekly? It's also in the, where is it? System software. It's well in the leading quadrant. All right. So I'm looking at the best stocks within system software that are in the monthly leading. And I'll have a few scans in here that will give you a heads up as the stocks that are meeting our criteria. Now, within the leading monthly quadrant, we have Microsoft, we have Palo Alto, we have Oracle, we have ServiceNow, we have Teradata. This is a small cap company we'd be keeping an eye on there. Quals, it's actually Qualsys. But let's look at Palo Alto, let's look at Microsoft, and let's just see what the RRGs look like here. So ServiceNow, Microsoft, Palo Alto. Microsoft's made an amazing move in. ServiceNow, I love this hook. Really good position on monthly. Really nice, powerful hook on the weekly. Palo Alto's kind of fallen out of favor. So let's go over to NOW and see what we can find here in the wave count. Monthly, weekly, daily. Weekly is ripping topside. We are on track to make a move towards these all-time highs at 707.60. The wave count that we have here is, let me stretch them out a little bit. So we have 1, 2, small degree, 1, 2, 3, 4, 5. We might have some resistance into those old-time highs because we do have a cluster of typical wave 5 resistance here in this highlighted zone. So even though ServiceNow looks good, we might have to look for a way forward. And this is a stock that we do hold. We're long from 603 in our stock swing desk. So if we move up into that wave 3 zone, we're going to have to protect and trail some stops up below it. All right. So that's ServiceNow within the leading system software. Let's go to application software, which is down here. And then let's look for the stocks in the leading quadrant. Again, let's get the context where application software is on the RRG. So application software is right here, just moving into monthly leading. And then over on the weekly, it was down into monthly weakening, but that just hooked back into the leading as well. All right, with a good north-northeast heading, we like that. Stocks that are coming up, this is a good one, SNPS Synopsys, and then Cadence is a similar one, but the two right here, actually Cadence isn't coming back as a successful scan, but Adobe and SNPS are. And let's see what we can find here. SNPS not making a huge move on the monthly. Sort of the vectors are tight, but in a good direction. You know, compare that against Adobe. Adobe's making a huge move. And then Adobe, I love the hook higher, where SNPS just continues to march out to the right. So those are going to be two very strong stops within systems software. So let's look at Adobe. Get them off the, let's get down here. Here's the monthly, here's the weekly. Let's see what we have on the weekly. Same deal. So we have minor 1, 2, 3, 4. We're going to have some fib resistance into the 700 mark here in Adobe. That does look like it has a little bit further to go. So not as concerning as ServiceNow. And then as we get to the daily, if this is in fact accurate, if this is a wave 2, we have a lot further to go. And that's the big question on the table that I put in front of you guys yesterday is, was that shallow little wave 2 all there was in Nvidia and the market, and we're going to rip higher? Well, Adobe's continuing to look really, really good. The other one I wanted to look at is in this group is SNPS. Here's the weekly, here's the daily. This guy is a different wave count. This is a tough one. This goes into the intricacies of Elliott a little bit. This is a lot more bullish than what I've seen, but this one is not going to be accurate. So we're going to have to redo this, and that'd be 3, 4. No, this isn't correct. I have a team working on the Elliott Wave count, and sometimes I have to kind of override them to match up with what's going on in the market. So we have 1, 2, 3, 4. We need to be looking for a little bit of resistance here, I think, in S&PS. So, you know, if we do just continue higher, I'm going to undo that wave count. But I'm a little concerned about that guy, about that very bullish count. Okay. Application software, we're good. And finally, let's look at semis. Semis are going to be the big story right now. Let's do semis leading. Okay, nothing comes back on a scan. Broadcom and Nvidia looking solid. The issue here is, the only issue is Nvidia is kind of hooked back to the left. We want to see them moving in a north-northeast direction. So good monthly, decent weekly. Like to see Nvidia move up, but Broadcom is on a weekly basis is acting stronger than Nvidia. Let's see in some of the other monthly quadrants, do we get any signals? Early turn signals, what I'm looking for. We do have one in Micron. I saw that one earlier. And then Intel's actually starting to come back a little bit. Now, Intel looks solid. Skyworks, Qorvo, anything down in the lagging. Qualcomm actually did come back on the scan. But it's certainly a weaker stock as it's all the way out here in monthly lagging. Okay. So let's take a look at Nvidia to finish the video. I know this is a super long freestyle kind of video, but it's fun to do. Hopefully you find it helpful. So in Nvidia, you know, the deal here is going into the report, I was not sure if we were going to do a completed 5-wave move and we're setting into an ABC correction wave 2. And it looks like that's happening. We have the backside of broken downtrend resistance from the August highs connecting to the October highs here, and we're looking for a wave 2 correction down into the support while above 450, getting off the daily down to the 97-minute. We want to look at the internals of this ABC correction. So it's down in A, it's 3 waves up in B, decomposed as a correction, and then for a flat, what you want to do is find 5 waves. So we were looking for 3, 4, and then one more push down into the 470 to 450 zone. That should be it for Nvidia. And then I think support can be found, and that would give the overall market time to collect in wave 2. All right. Hope that helps, guys. I know it's a super long video, free form, but kind of having fun with it here as it's a shortened holiday week. Happy Thanksgiving. All the best to you and your family if you celebrate. And we'll see you guys when we're back upstate New York in the cold and snow. See ya.